Most people will be poor forever, not because they don't earn enough, but because they don't understand the math working against them. I'm joined by CFA and finance coach Rajat Soni, who's had over 300 conversations with people about their money and personal finances. We dive into his controversial conclusion that debt and convenience are keeping even high earners broke. And we break down 10 critical insights to help you escape the rat race, take back control of your financial future, and why saving your way to wealth is a big lie in a fiat money system. Rajat also shares his simple formula that explains how a $1 periodic Bitcoin investment beats a $5 million standard savings account over time. I know, it sounds wild. Let's dive in. Rajat Soni, welcome back to Bitcoin for
Thank
Millennials.
you, man. Thanks for having me. I really like having these conversations. These are so fun.
You are a CFA, right? You've done a lot of one-on-one personal finance coaching, like over 300 conversations with people. And you recently published a video where you said, my conclusion after all these conversations is that most people will be poor forever. And yeah, that's quite a statement. So I'd love to dive in to that to, yeah, kind of get your thoughts around what in general is probably like just a money mindset of people or finance mindset of people. Like what have been the things that you've discovered or found?
Yeah, absolutely. So I think one of the things that most people don't quite understand is how debt works. So they have, let's say, you've probably seen the videos. There's a lot of people who are talking about how they've been paying off their student loans for like 20 years, 15 years, 10 years, and they've been making payments each month, but the balance is either higher than what it started off, or it's the same thing. And I think what people don't quite understand is that they're paying the interest. Yeah. They're just paying the interest that accumulates each month. Like, let's say you have $80,000 in student loans and your interest rate is like 10%. You're paying $8,000 a year in interest alone. So if you're paying $600 a month, I think it's more than that, more than $600 a month. But if you're paying about $600 a month, then all of that money is going towards interest. You're paying $7,200 a year in interest alone. If anything, because of the interest, your loan is going to increase.
Yeah, and well, this is something we could go in a certain direction with only this topic, right? But I think in general, what is so interesting is that, and this is one of the things that I think woke me up as a millennial, and I hopefully think, you know, it will wake up other millennials. Like, you have a certain path in front of you, and you did stuff to get here, right? Like get a certain education, you know, follow that traditional path, but. You know, in my country, student debt is quite high and normal, but I think in the US, it's even more almost like institutionalized, right? Like it is just like you get in debt to get your education. But like you said, once you get into the working field and you get your first job or you're growing your career, that kind of debt is still tied to you. And this is basically the main thing that people are struggling against in their, let's say, adult/career life.
Yeah, I had a guy who he was in his 60s and he went to law school, obviously when he was young, and he's still paying off his loans. He still hasn't paid them off, which is really scary because he's not even a lawyer. He didn't even go into that career. And then so there's education. Education is okay because at least you're getting something out of it. You could potentially turn that education into something big. I mean, not even there are some degrees that are terrible, obviously, but then there are other ones that are extremely, extremely valuable, and you can make your money back. But then there's another one that's even worse. So in that video that I mentioned, there's another one where I was talking about cars. So what people do is they buy these cars. I see a lot of videos of people talking about it, but then I also see this in real life. So I used to think, oh, the videos are fake.
Yeah, I never understand this, by the way, from a European point of view. It's like European mind cannot comprehend, right? Like you buy a car, like there's leasing here, but it's not like in the US. So I also sometimes see these videos where people are like, well, my car payment is only like $200 a month and I have this 2025 something pickup, but the lease is for like, I don't know, 20 years or so, just a wild number for a car. Yeah.
Your car's not even going to last that long. But that's the thing. So there's people who have, I came across this video where this guy got a Cadillac Escalade for like $118,000. And he's paying like 13% interest on it. So in total, he would have, I think his term was like 8 years, 9 years. In total, he would have ended up paying like $190K, paying $2,000 a month. It's absolutely insane. But that's the thing. These videos seem like they're crazy, but they're not, because this is how the average person thinks. The average person, the way that I see it, the way, at least from my experience, the way that I see it, most people are just thinking about, how do I get out of debt? Or how do I consume as much as I possibly can? How do I get a job and get as much money as I can to make, or to buy the things that I want? That's what they're thinking about. They're not thinking about, how do I set myself up for the future? How do I build this? The way that I mean, people talk about this all the time, but a way to look at money is every time you put $1 into, let's say, Bitcoin, that dollar is creating an army for you that's working for you. It's almost like an employee. It's almost like employees, because every time you buy Satoshis, they're going to work on your behalf and they're going to continue to grow forever. But people don't think of it that way. People think of it as, oh, I don't want to wait. We were just talking about it. I don't want to wait 5 years for this thing to grow. I don't want to wait 10 years for this thing to grow. But the time's going to go by anyways.
Yeah.
A lot of people have this complaint that, oh, I'm already too old to do this. Like, there was some, so when I started my social media journey, I'm sure you felt the same way. When I started up, I was like, oh, I'm too old to do this. I was 28. And I was thinking, oh, I'm too old. I can't do this. The people in social media are young, but who cares? I don't care. To me, it's more like, I'm going to be, now I'm 33. So to me, it's like, I'm going to be, this is the way that I should have thought back then. I'm going to be 33 anyways. So I might as well be doing something that I actually enjoy doing and I actually like doing. And that can translate into investing as well. People are going to be in their 50s anyways. So why not be in your 50s with like $1 million, $10 million worth of Bitcoin, whatever amount you can accumulate?
How can we help people to kind of change the course? Like what you just mentioned, like if you have Bitcoin, you have like this army of workers work for you. Like, can we simply explain why, if you save, right, so have any excess money that you don't need to live in Bitcoin, why does it accrue purchasing power over time, and why is that a better way to save than in fiat money?
I want to show you a formula that I kind of put together. So this formula here that you see, this formula here is, the way that I see it, this formula here is the key. So you earn more, you spend less, and you invest the difference. You earn more to increase your purchasing power, to increase the amount of money that you're getting, of course. You also have to spend less to make sure that you're not spending everything that you earn. It's like if you're working out and you want to lose weight, but you keep adding calories, unless you burn those calories, you're not gonna save. But I mean, this is the opposite way. With working out, you're trying to get as little calories as possible. With earning, you're trying to get as many calories or as many dollars as possible. The key here to understand is that your earning potential is literally unlimited. There's no limit to how much money you can earn. This is the mindset that most people don't have. Most people, I didn't have this mindset. But when I worked a job, I didn't have this mindset. The way that I saw it, let's say, for example, I'm making $35,000 a year. At the time, there was a job that I was doing. I was making $35,000 a year, and at the time, I was like, "Oh, this is great. This is all I need. $35,000. Wow, this feels like a lot of money." I had been trapped in that fixed amount of earnings, and I didn't really think past that until I started doing my own thing, right? And I think that's the key for most people. They're missing one of these, right? They're earning more, they're spending less, and they're not investing, or they're not earning enough and they're spending as little as they possibly can, but because they're not earning enough, they can't invest because they don't have a gap. Or there was a guy that I had in one of my meetings. He was earning like $300K a year, but his wife was ordering DoorDash like 20 times a month, or no, sorry, 20 times a week.
Whoa.
20 times a week, every single meal. And she was getting DoorDash for her entire family. So like I was going through the numbers, and it was insane. She was spending like $2,500 to $3,000 a month on DoorDash because he's making good money. And so think about it. This guy he's making $300,000 a year. He's like in his 50s, They have 13,000 in their bank account saved in total. 13,000. Okay, that sounds pretty good. It's like, oh, that's an emergency fund. You have assets and all that. But they didn't even have assets. They just had their house. They had nothing else. They had no investments in stocks. They had no investments and no other investments in real estate. They didn't have Bitcoin. And it was just like the money is going to garbage and you're spending it on convenience. And that's why most people will be poor forever, right? They think about the moment. They think about convenience right now. They think about how to avoid doing as much work as possible. And it translates into other things too, right? It translates into, let's say, when you want to invest, people don't want to wait. They don't want to wait for their investments to grow.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now OnRamp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. OnRamp, strength in many, simplicity in one. My American friends, I've got something for you. If you're into Bitcoin, you want to grow your stack in any way possible. What if you could do it effortlessly just by spending your fiat? The Gemini Bitcoin credit card is designed to help you do just that by giving you instant Bitcoin rewards on every purchase. Just use it like any other credit card and earn back up to 4% on transportation, 3% on dining, 2% on groceries, and 1% on everything else. There are no annual fees for this card and no exchange fees to receive your Bitcoin rewards. Sign up to get your limited edition Bitcoin Orange credit card and earn a $200 Bitcoin bonus when you spend $3,000 in the first 90 days. You can find more information and terms in the description below or go to gemini.com/Bram to sign up today and start stacking effortlessly. That's gemini.com/Bram.
I gave a couple of different examples in the video where, number one, I talked about putting $50 a month into Bitcoin versus $50 a month into your savings account. Huge difference. Huge difference. Because with your savings account, you're making like 1% a year. With your with Bitcoin, you're making, what is it, like 20-25% a year? And I want to show you this quickly. I think this is the funny thing. So I made a quick chart. I mean, this is just theoretical for anybody who's watching this. I'm not telling you go buy $100 worth of Bitcoin. You don't have to do anything else. I'm just showing you what exactly, like some people take it that way for whatever reason. But I'm showing you here, if you bought $1 worth of Bitcoin versus you put $5 million in a savings account. So the $1 worth of Bitcoin, let's say, grows at 35% per year, and it keeps growing and keeps growing. And then you have that $5 million in your bank account. It keeps growing at 1% per year. Eventually, that $100 will be worth the same or more. You don't need, like with housing, for example, you need a minimum $100,000 as a down payment to buy the house, right? Or you need $50,000 or $25,000 or even like $10,000. Let's say you buy the cheapest house in the neighborhood, you buy the cheapest house in the country, you put down $10,000 as a down payment. That $10,000 is a barrier. Most people can't even get to $100. So how are you going to get to $10,000? The way that I see it, you can even put $1 a month into Bitcoin. You can put whatever money you want into Bitcoin. Like there's a guy who I work with. He's from Nigeria. One Naira is worth less than one Satoshi, and their income isn't that high, right? They're making like $200 a month maximum, and he's still stacking. He's still finding a way to stack. And people will be like, no, but his cost of living is lower. They'll like give him whatever excuse they can. But no, that's not the case. He spends as little as he can. Even though he's making this little amount of money, he spends as little as he can to be able to buy Bitcoin. And this is how it is. I made a video where I said on X, if you buy $1 worth of Bitcoin a month, you'll be able to buy a house by 2087. So that number on its own, okay, it sounds ridiculous. 2087, you're gonna be dead. But think about it mathematically. Think about it logically, right? Okay, $1 a month, you can afford that. You don't want to get to retirement in 2087, so put in $2 a month. What does that do? It'll get you retired in like 2069. Put in $3 a month. Put in $5 a month. Put in $10 a month. You stack up over time. You don't do it all at once. I like to make this analogy. You don't eat a meal in one bite. It takes time, right? It takes time to get into. It takes time to take every single individual bite. Maybe you'll finish a meal in like 50 bites. I don't know, 50. Let's say 50 bites. 50 bites, right? They want to build this generational wealth in one day. You can't do that. That's not how it works. That's not how life works. Everything works in steps. Even, let's say, for example, on our Bitcoin journey, we're learning about Bitcoin. We're trying to figure out what it is. People will say, I understand it. It's a scam after looking at a book, or after not even looking at a book, after looking at headlines for like 3 minutes. They're like, oh, it's a scam, Ponzi scheme, pyramid scheme. What else? Used by criminals. Quantum computing is going to kill it. Right? Like that, they just have, exactly, it's a bubble. They have all these excuses because they spent so little time learning about it, but it takes time. Everything that's worth having takes time. Building relationships, building a body that you want, not wanting, like people have this, they have this problem with how they look and they don't want to put in the time, they don't want to put in the work, so they go with like Ozempic or some shit. Right? That's the problem here. I think the problem here is that people want shortcuts and they can't. You can't do that with wealth. You have to first change your mindset. Then you have to change the way that you do things. Then you have to make sure that you understand the financial system. Then you have to understand that scam that you're talking about, right? The entire financial system is a scam. If you can do everything right, and what I mean by doing everything right is you go to university or college, or you have some kind of second level education, and then you work a job, and then you save. You spend less than you earn. Even if you do all of that, you're still going to get screwed over, because if you don't put that money into investments, then that money is going to slowly die. Your purchasing power is going to be transferred to other people. And that's the thing that people don't quite get. That's the hard part. That's the hard part for people to understand, because they've never been taught this. And I think the issue. So the second question that you asked, why don't people know this? Number one, it's because their parents don't understand it, and their parents expect to have teachers teach it, and teachers don't even understand it in school. They don't even understand. They're in terrible financial situations. So how are you supposed to teach somebody how to manage their finances when you don't even know how to manage your own?
My next question, and maybe it's two questions into one, is a lot of people look at Bitcoin as an investment or a trade. Sometimes I think you still use the word investment, but I wanted to ask you, why is Bitcoin not a trade? Maybe it's the last trade you do.
Yeah.
And maybe tie into that, there was another question, what is the debasement trade? Right, that's something that is now kind of like this topic in financial media. So maybe kind of like weave that in together. Why is it not a trade, but why is it a trade that you should do when you tie it to debasement?
Yeah, so you trade into it, and then the way that I see it, you don't trade back out. What else are you going to trade for? What are you going to take dollars? You're going to bet on pieces of paper going up in value over time? I think that's a stupid bet. I don't think that makes sense. Maybe in the short term it'll work, but in the long term it won't. And the reason why it's not a trade is because this is probably the only asset that will give you the kinds of returns that it will. And then this is something that most people don't. They can't wrap their heads around. They try to go based on historical data where retail was basically dominating the market, and they think that the trends that we had from back then are the ones that are going to continue going forward. And I don't quite agree. I don't quite agree with that. So I think that this is not a trade. I think this is something you buy and you hold literally forever. Yeah, hold on to Bitcoin as long as you possibly can. The debasement trade is basically what you're doing is you're giving away something that's being debased, and debasement means that losing value. The value is decreasing. The value is being taken out of it. It's being extracted from it. You're giving that thing away, and you're getting back something that can't be debased. Yeah. So you're giving away something that can be stolen from, and you're getting back something that can't be stolen from. So I think the key here is maintaining your purchasing power. That's the most important thing. So what you do is you trade your fiat, you give it away, then you get back something that can't be debased, which would be Bitcoin. Some people choose to hold gold. Some people choose to hold stocks, real estate, whatever it is. But you're basically buying something that can't be printed out of thin air.
The bigger picture kind of that people need to understand, it's not an investment. Perhaps it's like one trade, the last trade, and look at the price as an exchange rate. Like you're moving to other money. Like everything you want to keep the purchasing power of, at least that, move that to Bitcoin.
Yeah. And then on top of that, what you were saying there, they're I guess they hide inflation because we don't even think of houses as shelter anymore. We just think of them as an investment. We think of them as a savings account. And that's how distorted
that's how
reality
you make
has
wealth,
become.
right? That's what people say.
That's like that's how distorted reality has become, right? We don't even think about we don't think about the real use of things. We think of it as more like, oh, how can I make money from it? Have you seen that guy on I think he's on Twitter. He's like accumulating all the Kabuto Pokemon cards.
Pokemon cards, yeah.
Right?
Yeah.
Like it was supposed to be like the shittiest Pokemon card ever. And this guy's buying as many as he can, and he's pumping the price up, which is just absolutely wild. Because everybody just thinks of things as how to make money now. They don't think of it as, oh, this is a Pokemon card, and people play games with it, and they do whatever with it. And it's just everything's become a collectible at this point. Everybody is buying things because, number one, they want to look cool to other people, or they're buying things because they want to protect their purchasing power.
Yeah. So when people say they don't have money to buy Bitcoin, you say they are wrong, and I want to ask you why, but we kind of touched upon it. Like I said, is it because they look at it as an investment, right? Like not as what we just described, like it's a tool. It's like a superior savings tool, basically.
I think people just see it as they need $100,000 to buy a Bitcoin. They need to buy one. It's unit bias. You don't need to buy a whole Bitcoin. It's like they think like, oh, you need to buy a whole house.
So what do you advise people to do?
Buy fractions, buy whatever you can. Like I said, $1 a month. Start somewhere, right? People just want to get out of debt. That's their goal. They don't care about anything after that. They want to have a zero there, and then any money they have in excess after their bills are paid for the month, they want to treat themselves. They'll go to a spa, or they'll go get a car, or they'll get a better rental, or whatever they can do to spend that money. They'll find some way, and they want to look maybe cool to their friends and family. Maybe they want to look more successful. But the goal isn't to protect their purchasing power for the long term. It isn't to protect themselves for the long term. It isn't to buy freedom for the long term. Most people are just thinking about, how do I spend this money in the short term and just enjoy my life. And I'm not bashing anybody for saying this, because I used to do this. I'm telling your audience, I'm telling you, I used to do this. I used to think this way. I used to think like, oh, I want to get a Rolex, or I want to get the car that I wanted for a very long time was a Dodge Challenger. Right. And I was okay with whatever the payments were. I wanted to buy a brand new car. It would have cost me way more in gas. It would have cost me way more in repairs. But thankfully, I came to my senses and I bought a Honda Civic. And that Honda Civic has lasted me like 10 years, 11 years now. And I don't have to pay much in gas. My repairs are super cheap. My insurance is super cheap. My car is paid off. I paid it off probably in like 2-3 years. Whereas if I got the Challenger, I would have probably been paying it off for like 7-8 years, right? And it doesn't just apply to you, to your audience. It doesn't just apply to you if you're broke. It applied to me at one point as well, because I was stupid with my money. I didn't think of things this way. I was terrible with my money, and I used to think exactly the same thing. I need to earn more to invest, because anything that I was earning was just being spent in an idiotic way. I was spending it on stupid shit that I didn't need. Stop spending your money on dumb things that you don't need in your life. Put your money away into some kind of asset. And we're not telling you have to buy Bitcoin. We're not telling you have to go all in on Bitcoin. You can split it into multiple assets if you really, really need to. We just think that Bitcoin is the fastest horse in the race. You can buy index funds. You can buy real estate. You can buy whatever you want to. But at the end of the day, your goal should be to make sure that your savings aren't being debased. That's the key. Mm-hmm. What you're doing is, if you keep your money in dollars, you're hoping that the dollar's purchasing power isn't going to decrease. But most people aren't even at that point yet. Most people aren't even at that point. They don't even know what purchasing power is.
The problem is if you cannot earn more units today, then the pace of the debasement of the pool of capital that you are creating, that is when you're going backwards, right? And I think that's what you were also just saying. Like in some weird way, people don't understand saving, but a lot of people feel that feeling of whatever, I'm just gonna spend it all today. It doesn't really matter anymore. Like there is no future. How do you talk about that with people?
It's really difficult to delay gratification. Just right off the bat, it's very, very difficult to delay gratification because it's not fun. It's not glamorous. Like if you're delaying gratification, you're giving something away for the present and you're getting something in the future. And there's this, have you heard of the marshmallow test?
Yeah, with the kids. Yeah,
with the kids. So they're given the option of either getting one marshmallow now or 2 marshmallows in an hour. And there's a lot of relationships that people came up with in this. The people in that test, the kids who wanted the marshmallow now, apparently they had a lot of they did similar things in their adult life, where they would make these decisions that were more impulsive. They were more geared towards the present rather than the future. And I mean, it makes a lot of sense, right? Because most people have such a difficult time with delaying gratification because it's hard. It's not easy. You see the optionality of what you can buy with whatever money you're saving. Before you started stacking Bitcoin, you probably wanted a Lamborghini. But then when you started stacking Bitcoin, you had enough Bitcoin to buy that Lamborghini. You're probably like, no, I don't want it. Right? Because when you wanted the Lamborghini, you were thinking about how people are going to think of you. You were thinking about, oh, this car is really cool. And then afterwards, you start thinking, I don't really care about this thing. And it can be created out of, like, they can create as many Lamborghinis as they want to, but you're exchanging your time for this Bitcoin and then you're giving that Bitcoin to somebody else. You're giving away something that's finite.
Yeah, it's interesting, right? Because basically this is what I learned over time, and it took me some time. Like money literally is time, right?
Yeah.
And time is freedom. Let's say someone gets to this point where they save in Bitcoin, right? They try to create this capital in Bitcoin to eventually create time and space in the future, or capital to do whatever they want in their lives, right? Yeah. You're still living in a fiat world, right? We're still living in a fiat world to some degree. What would you recommend, or how do you talk through this with people with regards to this emergency fund, like you said in the beginning, right? I think personal finance is all about saving and emergency fund, and then fun stuff, right? So how do you talk about the emergency fund part?
So I think the emergency fund is a way for you to. It's a way for you to lower the volatility in your life, and then you can take more risk. So what I mean by that is, let's say, for example, if you, let's say, okay, so actually let's go into MicroStrategy as an example. So MicroStrategy today, they accumulated a little, or they announced that they accumulated a little bit more cash over the last week. So a little bit. They accumulated like $750 million worth of cash. So they have more cash now. And the way that I see it, it's like their emergency fund. It allows them to create more products. It allows them to create more services, and they don't have to worry about what's going to happen in the next 2-3 years now, right? They don't have to worry about what's going to happen to Bitcoin. So if they had no emergency fund, they'd constantly be worried about, oh, if Bitcoin drops to 10K, we're going to go bankrupt. We're not going to be able to make our interest payments anymore. We're not going to be able to do this or that. Our stock is going to fall. Now they don't have to worry about it. Now, worst case, let's say, for example, Bitcoin does go to 10K. They have like $2.1 billion in cash. They can put all that $2.1 billion into Bitcoin if they really want to. I'm not saying that they're going to, I'm not saying that they should, but best case scenario, let's say their business goes crazy, people want STRC and they're constantly buying it. They can use that $2.1 billion emergency fund. They can just dump it all into Bitcoin. But now they're protected. They don't have to worry about if the stock doesn't perform for the next year. And I think that's the problem that most people have. The problem that most people have is they don't have enough money to last until the end of the month. And if something were to come up, then they're screwed. Like, let's say their car breaks down. I think this is part of personal finance, the stress that you come across when you don't have enough money.
Right now, through 2025, Blockstream is running their biggest sale yet. 21% off the Blockstream Jade Plus right in their store, and your price is adjusted at checkout. This is the lowest price you'll see all year on the most trusted Bitcoin-only hardware wallet on the planet. The Blockstream Jade Plus is the simplest, most secure way to protect your Bitcoin. With a sleek design, full color display, and a dead simple setup, you'll be securing your sats in minutes. And pair it with their Blockstream app for the smoothest onboarding, offering advanced features like air-gapped setup, QR mode, and native multi-sig support as your stack grows. Go to store.blockstream.com, where the 21% discount is active through December 31st. And if you use my code BRAM, that's BRAM, you get an extra 10% off your order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with Stampseed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, Stampseed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from Stampseed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with Stampseed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. I think this is the unfortunate situation of a lot of people, right? And yeah. I don't know how else to reply to that than, I feel sorry for that, but that again, there's no one really coming to save you. That's the whole point. The whole point is that you need to find or try to get a way out of that, but also know that there is a way to save, right? Once you're out of that, to not go back to that anymore, right? And I think in general, it's just extremely sad that a lot of people are in this situation, right? If you just think about, I don't know, technological progression in general, and what technology has brought us, like that is not even evenly distributed. It hasn't even reached all the people that it could reach, right? And I think that's also just something that nowadays really plays into this idea of equal opportunity and stuff like that. You would want that for everyone, but I think the realization is, or just the fact is that it's not, right? So even though I think we are talking about this is something that you also, I think, recognize.
The crazy thing here is that people underestimate the value of their mindset. And if you think that you're a victim, then you're going to remain a victim forever. If you think that you don't deserve wealth, like deep down, people do believe that. Like, so when you buy DoorDash, for example, you're paying not only the restaurant, you're not only paying DoorDash, you're also paying for somebody to literally courier a burrito to your house. Do you really need to do that?
I think DoorDash is wild. I think it's wild. Does your
burrito need like a private courier service? No, it doesn't.
And a private chef.
Right, a private chef, exactly.
Like you can make your own burrito, But
that's so wild to me. Like they're giving their money away and they're getting nothing in return. And they don't understand that, okay, this is the problem. This is the thing that's holding me back from building my finances.
Well, I also think that you cannot always blame the person, right? Like I also think this is cultivated, right? Like you are constantly tempted every day to spend your money on shit you don't want, need, or like.
We have like 10,000 ads a day or something that are placed in front of us.
Exactly. So I also think this is, again, bigger. If you think bigger picture, this is a sign of the times, right? The sign of the times is that all the money you have today is worth the most today. Everyone basically knows that in some way, shape, or form, and they're trying to get your money out of your pocket in their pocket in any way possible. Because if you know that it's being debased at an ever accelerating rate, you also have to figure out how you can accumulate it at an ever accelerating pace, so you don't go back in time, basically, or well,
Yeah.
become more poor, right? So that's also why you see a lot of the quality of products and stuff like breaking down. I mean, you mentioned Burrito, DoorDash. I think there's even you can use a buy now, pay later stuff on buying burritos in the US, right? So you can go in debt to buy food.
Wow.
Absolutely insane.
And that food is disappearing within minutes. Like you're putting it in your mouth and it's gone. You can't do anything else.
And the debt is stuck to you at like a 6-7% interest rate, right? Like so,
Insane.
And so even if you don't like the burrito, you're going to be paying for it. But you know, it's funny on one side and incredibly sad on the other side that is where we are, right? So I want to jump to another question I have, and I'll weave in two in one. Now we're kind of in this phase where Bitcoin went from like 125 to like 85. I think time of recording, we're at 89, 90. So you see this volatility. You say this volatility is a gift. Why? But also, if someone has Bitcoin now, should they try to use this volatility, right? Okay, the price goes a bit higher, I sell, and it goes lower, I buy back more. Like how do you talk through that with people?
I don't like timing the market. I feel like I've tried it before, and I've bought options. For example, I bought like 6-month options, and they've expired worthless. I've tried to sell and then buy back. I tried to short Bitcoin once, and I did absolutely terrible. I don't like timing the market. I feel like it's not worth it. The way that I see it, instead of wasting your time trying to time the market, I mean, of course, you want to look at the price and all that stuff, but instead of wasting your time trying to time the market, work on your craft. Work on what you can to make more money, because you'll end up making way more money that way anyways. If you're timing the market, I mean, the only reason why you're going to get paid if you do well is because you took way more risk than you expected. And I think one of the worst things that can happen is if somebody does try to time the market and it works out for them, they become overconfident and they try to do it again and again and again. And eventually they end up losing, right? And you don't know if that's going to be your next trade or the trade after that. I constantly get told by people that, oh, I'm buying altcoins to convert them into more Bitcoin later on. That's timing the market. Because what you're doing is you're expecting that your altcoin position will be worth more than Bitcoin at that time, and you'll have to pay less in taxes. So I think timing the market is one of the stupidest things you can do. You can try doing that if you want to, especially as a new investor. You're going to lose money. Like there are people who have literally never traded before, and they've never spent time in the market, and they have no idea what market psychology is like, and they're telling me, oh, but I want to wait until Bitcoin drops to 60K before I buy. How do you know that that's going to happen? You have no idea. These same people, when Bitcoin was 126K, see, they don't realize it. They were thinking that, oh, it's at 126K, it's going to 150K, it's going to 200K, it's going to go 300K, and that's why I'm going to buy it right now. See, they kind of contradict themselves. They think it's going to go higher when it's high, and then they think it's going to go lower when it's low. Mm-hmm. And that's just how markets work. The markets are designed to do that, right? The price moves in a way that makes you feel really stupid. It makes you feel like you have no clue what you're doing. There's this video I saw. It's called "Bitcoin is Max Pain." That's exactly what it is. It's max pain. It hurts the most people possible. The only people who get out alive are the ones who hold. Mm-hmm. If you're trading, you're probably going to end up messing up at some point. If you're using what is it, perps? Is that what it's called? If you're doing whatever you like, there are all these kinds of crazy strategies that people have to accumulate more Bitcoin, and they all end up having less, right? Yeah. This guy, have you seen that guy James Wynn on X?
Yeah, he was up how many 100 million?
100 million. He was up like $400 million or something. He lost everything. Yeah, because he thought he could time the market. Yeah, and that happened over and over again. He kept losing more and more money, and I think at one point he'll finally say, "Oh, I can't do it. I can't time the market. I just need to buy and hold."
Well, I think it's fine if you like trading and you think you can be good at that and you want to study that and all these things, right? But I think the beautiful thing of Bitcoin is, and I think we both got there, is like I don't have to trade. Like I understand Bitcoin before 99% of people understand Bitcoin, before 99% of people understand their fiat currency is being debased at an ever accelerating rate, and they need to do something about it, right? And the best option to mitigate that debasement, like we're talking about, right? This conversation is Bitcoin, and I'm just going to hold it because there is really no alternative, at least, from our point of view. That is also actually what gives you the freedom. The fact that you make this decision in a very conscious way, and you're like going through that phase of volatility, right? Maybe you could talk about that, but the volatility is also because people are figuring out what is this worth, right? If everyone already knew what this is and what it's worth, price would go up way, way faster, especially with Bitcoin also being having an absolute finite supply cap.
Yeah, see, that's the thing. Most people don't quite see that, okay, the market sees this as a risky asset. There are other people who see this as a savings vehicle. And that's the battle that's happening right now. The people who see it as a savings vehicle, all they have to do is buy and hold. Whereas the people who are thinking of it as a risky asset, they're shorting it, they're doing this and they're doing that, and they're doing this and they're doing that. Bitcoin is just constantly getting beat up by just people on both sides of the market. And that's what people don't quite understand. The people who are traders are going to do whatever they can to get that edge. And if you're a new investor, you're not going to have that edge. You're going to get wrecked.
I think you also talked about this, but I wanted to ask you, like, why does owning Bitcoin make people enjoy their lives more? Like, what does it do psychologically when you have a better money that you're saving in, where you're actually like lowering the uncertainty towards the future?
So the way that I see it, actually, I'll tell you a little bit about myself. So back when I used to be terrible with money, I would be worried about, so I worked this job where I had to pay for parking every day, and I was terrible with my money, like I said. So my cards were maxed out and I was making really, really bad decisions. And there were times when I'd tap, it wouldn't work because I didn't have enough credit limit on my credit card. I was just so stupid with my money. I was spending it on just the dumbest shit. I was spending like $500 a month on takeout every single month. And back then, like, you could get a good meal for like $8. Right? So I was spending $500-$600 a month every single month on takeout. And that stress is not worth it. Like when let's say you're going to pay for your car or your parking, and you're in line, there are people behind you, you're tapping your card, it doesn't work. I mean, I'm smiling about it now, but back then it was super stressful, right? And I think that's what Bitcoin changes. It gives you that purchasing power where you don't have to think about that anymore. You don't have to think about how do I get into the parking spot if I don't have any money? You can't, right? Like I would have to look for change in the side pockets and the console and all that stuff. I'd have to look for change to pay for it. I mean, that stress is not worth it, right? And that's what Bitcoin changes. I think what Bitcoin does is it teaches you, number one, delayed gratification. It teaches you that nothing is stable. Nothing is stable. Nothing will be stable in life. Real life isn't about stability. It's about entropy. Everything is just completely, you don't know what's going to happen tomorrow. We have no idea. Like, what if my house gets hit by an asteroid in the next minute? Nobody could have predicted that. You can't predict anything, right? What we try to do with fiat, for example, is we try to make things stable. And what I learned from what I learned from working in the financial system is the fiat currency financial system extracts a lot of value from you by telling you that they can stabilize your life. So fiat currency, so let's say US dollars, people see it as stable. They see it as, $1 equals $1. I'll be able to spend this $1 forever. But in the background, people don't quite understand this. They don't understand the mechanism of how that dollar is kept at $1. It's kept at $1 by debasing it. It's supposed to be worth more.
Yep.
Because we get better with technology. We get better at making things. Think about it. All those last 1,000, 2,000 years of us just growing crops. You don't think that we learned something on how to make crops more easily or how to be better at making crops? Everything that we eat is like GMO, genetically modified. Everything that we eat is covered in pesticides to reduce the amount of spoilage. So why is it that everything is still getting more expensive? Once you start digging into that, you start understanding why fiat is so terrible. So how does Bitcoin help you in that situation? So what Bitcoin does is it increases in purchasing power on its own. You buy a little bit. Like I said before, it's the best employee that you can have. It's constantly going to increase in purchasing power. It's constantly going to be worth more because over time, more people want it. That's simply it. On the other hand, with fiat currencies, nobody wants fiat. Even the wealthiest people in the world, they go short on fiat. They take short positions on fiat. They borrow fiat and they pay for the things that they think will increase in value. So why would you save in it? And that's exactly why you're losing if you're saving in fiat. That's exactly why you're going to constantly see that your wealth is disappearing. You're more stressed in your day-to-day life. You have fewer financial resources to rely on if something were to happen to you. Or let's say, for example, you need to repair your roof. You're going to have $50,000 in debt, or you're not going to be able to repair your roof. Or let's say your car breaks down. Let's say your engine light comes on. You're going to be so stressed out. You're going to be like, holy shit, what do I do now? What do I do now? I can't do anything. And then what that does is not only are you stressed out in the moment, but you're because you ignored the issue in the first place because you couldn't pay for it, it gets worse. So let's say you had to pay a $300 fee to repair your car. Let's say something happens, your transmission breaks down or some shit, or like your engine breaks down or something. I don't know what could happen, but it could lead to other things that make it even worse. So you went from a $300 mistake to a $3,000 mistake, and then your car is written off.
Yeah. Well, and you would expect that should be possible for everyone to afford because it's just the normal way of how things go, right? You can buy something that can break, right? You should be able to repair it because then you should be able to keep on using it, right? So I think to summarize that, at least for myself, it's like fiat money really distorts the reality, right? It distorts the way that you have certain expectations for how things go in your life, or what the quality of certain products or services is, right? And so you were told a story when you were younger, or like when you're coming of age and growing up, but the reality when you're an adult and actually earning money and trying to make steps in your career and your life is actually totally opposite of what's been told to you. And I think what we're talking about here is that it is the money, right? The quality of the money distorts the way you can actually perceive and value basically, right? How do you price value? And so we'll get back to this definitely in another conversation. One last question: what is your spiciest point of view you have on Bitcoin or money that you think not a lot of people share with you?
So a lot of people think that Bitcoin is going to have diminishing returns, but I don't agree with that. I think the returns are going to accelerate because more people are going to figure out that the US dollar is a shit coin and they shouldn't hold it. And as that happens, the amount of Bitcoin available to be bought is going to decrease. And I think we are going to eventually see a supply shock. I don't know how long that's going to take. It could take 5 years, it could take 10 years, but eventually I do think that that's going to happen. People are so comfortable in saying that, oh, the last 16 years we had diminishing returns, so we're going to have diminishing returns going forward. But in the last 16 years, the market was dominated by retail. And even now, I would say partially the market is dominated by retail because we have a lot of these OGs, these whales selling, and all of them are retail. They're average people who bought this asset. Maybe they don't quite understand it. Maybe they did really, really well. Keep in mind, a lot of people who are selling their Bitcoin right now, this may be a controversial take again, but I don't think they understand Bitcoin. Because if you're selling it, what are you selling it for? Like, well, why does somebody need to sell 10,000 Bitcoin into the market? What's the reason?
Like, why would you sell a Ferrari for, I don't know, a plush toy or whatever, like something random, something extremely inferior and more impractical. But again, this is where the volatility comes from, right? It's also the volatility and understanding. So maybe that was the answer to that question. That's why it's a gift, right? If you do the work to understand the predicament you're in, the fact that you need to take action today, that there are a certain amount of options you have to mitigate the problem of accelerating fiat currency debasement today, then one of those options is Bitcoin. And of course, we think that is our best option. And I think this was a great attempt to tell others about that too. So I want to thank you. You will definitely be back. I think we have a great cadence going on. And I think you always have good insights from all the things that you do. So I want to thank you for your time and appreciate it, man. I hope you enjoyed this episode. If you did, you can click here to find more just like it. And click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode. Bye.